Hello, everybody. Where is Charles?
I thought you were going to start the show for us. I was making you start the show.
Wow, that was very unexpected. So I'm like, is this right?
Listen, how's everybody doing? I am in such a good mood today. We're gonna have some fun today. I was looking to say,
I can tell.
What's Red gonna do? Like, I want to see what is Red gonna do. I'm gonna just leave her on there.
You know what? I was writing my gratitude journal, my gratitude notes, and I'm looking at it, and I'm like, is this right? Or maybe I'm just looking at myself. That's good.
See, everybody, you always got to be ready. You never know what's happening. You never miss an opportunity. And that's why you can't miss this opportunity to learn how to trade cryptocurrency, what to look for, what should you do from our man himself. Peter, where are you at? Peter, did you see Maria's face? She's like,
No, I loved it. Perfect intro.
See, maybe now she'll take me out to $100 dinner, not just 75. You know,
I will. I promise you.
All right. Listen, everybody, if this is your first time here, you see already, we like to have some fun, but we like to give you knowledge. It's all about learning knowledge to help you in the future, because as we know, crypto, Bitcoin, Polkadot, like that one again, is hot. You got to do what you got to do. So our man here, Peter, is what we call our expert, teaching us. But like he always says at the end, whatever he tells you, make sure you do your research to see what you feel comfortable for you, because everybody's different. Everybody likes doing things different. So here's the knowledge he's given you. You have to run with it and learn from it and do your best. So Peter, let's run it down, my friend.
Hello. Well, welcome, cryptocurrency people. So Bitcoin, altcoins, we're going to get into the gist of trading it, not trading it, how to trade it, why to trade it. Do we do spot trading, leverage trading? What's the difference, right? So we're going to get into all the basics of that. I'm excited.
All right. So what you need to do is get your pen like Maria. If you look at Maria's pen, all right, I think this is her fourth pen because they keep running out of ink. She always has all these questions she's asking Peter, or Peter, you know what I mean? But she's asking the questions. I know you have something written down already, right? So before Peter even says anything, what did you write down? What was your first question? What was the first things you wrote down?
Well, I noticed that today we're going to dive in deeper into exactly with the technology, right? For what I saw in the images, that we're going to be looking at a screen where we're going to see how we actually do the crypto, the trading. Am I correct?
We'll run with that.
Well, I came prepared to see exactly how do we actually trade. We listen to the theory and like what wallets we should be using and what not to do. Don't put your verification IDs and anything. And now we're gonna go dive in the actual app. Am I correct?
All right, let's go. All right, Peter, what do we do? How do we trade? What do we need to do?
Okay, so we'll recap the basics first. We're assuming everybody knows how to get into Bitcoin. We talked about it many times before, right? It's about opening a wallet or getting a device that lets you keep your cryptocurrency off the internet. So most of us start with Bitcoin. There is some options now to go directly to Ethereum or other coins, but for most people around the world, we're going to be starting with Bitcoin. So all the trading advice I'm going to give, do your own research. But the important part to understand is for most platforms, if you're doing it the right way, there's exceptions. You could do 100 different ways depending everything in life. But the most logical and the safest way with any Bitcoin exchange anywhere is you start with Bitcoin. So the goal is we're going to talk about exchanging from Bitcoin to other altcoins and variations of that. But we have to assume that you know how to buy Bitcoin. So we're assuming that you know the basics of opening a wallet or opening an exchange, getting your Bitcoin address, which is a barcode and 32 digits. They're the same thing. So if you're beside someone, you could send them a picture with the barcode. But if not, you could email or text them a 32-digit phrase, which is words and numbers. And that's the same thing as your Bitcoin account or your Bitcoin bank account for the sake of understanding the concept, right? So we've assumed that you know how to get Bitcoin. Now that you have Bitcoin, and you want to trade it into other cryptocurrencies, right? We recommend Binance here a lot because Binance lets you withdraw up to 2 Bitcoins. Maria had some difficulties joining and not figuring out how to not KYC, but that is, they make that on purpose. Their goal is they want you to KYC, they want your information, not because they're like greedy and selfish and they want it. It's just as a company, it makes them more credible. It gives them more data points. Just like Facebook wants all your information and LinkedIn and other platforms. It's very normal for a online platform to want as much information as possible because at the end of the day, their business is data. Even though cryptocurrency exchanges, yes, their business is exchanging crypto, a side part of their business, whether they actually sell it or just use it for their own internal information, is data, right? So skip. We talked about this last time, or join an exchange that you don't have to give your identity. And there's tons of options. So Binance is the one I recommend because it's one of the biggest, but there's several that are just as good. And I don't want to name drop a bunch, do your own research, but we'll stick with the Binance. And there's a lot of decentralized exchanges that you could trade on that don't even ask you for email or nothing, but those are a little bit for the second layer traders. Like you have to have done a handful or dozens of trade or have a mentor if you want to go right to decentralized trading. That's like sitting with you or online with you, trading step by step in the beginning, because you make one little mistake in a decentralized exchange or a DEX or a swap, and like we talked about before, there's no one to say to fix your problem. There's no one that's going to be like, oh, it's okay, like you made this mistake. No, you make one digit wrong, big problem. But with exchanges like Binance, Bittrex, Kraken, all these other exchanges, whether you KYC or not, even if you don't KYC and you hit maybe the wrong button or there's in the interface, there's built-in safety measures where they're going to give you like an alert or some kind of update being like, hey, you sure you want to do this? You just opened a long. Would you want to open a short? That's going to cancel your long, like things like that. But on a decentralized exchange, when you put in your data, if there's a mistake, that's it. So anyone new to trading, stay away from decentralized exchanges. Again, you could make 100 trades in your first day trading on a more stable platform, and then the second day go right into decentralized exchanges. So no one's saying long term. I just mean in the short term or for beginners, make sure you stay away from leverage trading, which I'll get into after, and decentralized exchanges when you start, because again, you want to make your mistakes in a safer, more in an area that was made to do more basic trades, and that's going to work with you and help you. You don't want to go and jump into something, the deep end of the pool right away. You want to make sure you know how to breaststroke and do all your basic things in the shallow end before we go into the deep side of trading, right? Yeah. So that's why I'm recommending Binance or a more central exchange, because you could put in a small amount, whether it be $10, $100, $1,000 to start, and make a bunch of small trades and just learn the concept. So for people who are super safe out there, right, everybody has their own degree of risk, right? Whether it be in cryptocurrency or in mainstream finance, there's tons of platforms you can start with that are beta, that you don't use your actual money. So that would actually be by far the safest way for any new trader to, before you actually start playing with your real money. Even like I said, even if it's 10 to 100 trades that you do in a span of a few minutes or a few hours or a few days, just learn how to buy, set orders, and learn how to use the interface, just like using a Bitcoin wallet the first time you use email, the first time you use a smartphone, right? Just get comfortable with the technology of actually trading. So there is test nets on the crypto. I personally never use test nets. I'm jumping to the deep end kind of guy, so I don't always listen to my own advice. But so I've never used test nets, but I did learn on a test net when I was in like a long time ago in my early 20s when I got into Forex. So as much as I'm saying this, just because I jumped into crypto, I actually did trade on a test net once upon a time before I got into real trading. So I had experience in trading in the traditional markets a little bit before I started trading crypto. That's why I jumped right in. But if you've never traded anything, whether you want to start on a mainstream exchange and do stocks, or whether you want to go right into crypto, it's about understanding the concept. Buy orders are buy orders, sell orders are sell orders. It's understanding that trading at the end of the day, on exchange, it's like a casino. A casino is providing the platform, right? But the difference between a casino, it's more like a poker game. It's like having a poker game at your house, right? And you're playing against the other poker players. The house does take a little bit, right? But at the end of the day, you're buying it and selling against other humans, bots, traders, whatever. But it's an open market against buyers and sellers. So for you to be able to gain, somebody else has to lose. And there's nothing wrong with that, but it's understanding that that's what trading is, right?
Mm-hmm.
And then the house takes its 0.25%, 1%, fraction of a percent, whatever it is. So the basis of trading is understanding that you're buying and selling at an open market that is all times has buyers and sellers, and that's what makes trading and exchanges possible. Now, traditional markets, which we're talking about exchanges and trading. So traditional trading has been around a lot longer than cryptocurrency trading. So that's why I'm talking about it a little bit more than I would normally. But it's the importance of understanding that trading is trading, right? And grasp that concept. And it's not for everybody. So if you're new to cryptocurrency, by no means do you have to trade anything. You can just buy certain assets, digital assets, and hold them, right? Trading is a different game. Trading is for people who want to put more time into cryptocurrency or whatever it is. You could trade traditional markets as well. So you have to put in the time to learn how to trade. It's like just like a sport, just like a musical instrument, just like anything else, right? When you're new to it, you're not going to be good. And you need to have lots of practice to get a base. And even if you have a base and now you think that, okay, I have the base of this sport, the base of this music instrument, that doesn't mean you're good yet, right? Mm-hmm. So there's lots of levels to trading before you actually should expect massive gains. And there's always beginner's luck that could happen to anybody, right? But don't mistake trading as an investor and gambling. Those are two different things. A lot of people think just because they're putting it into a platform that's an exchange or into assets that it's not gambling, but it's all the way you treat it. A professional investor that trades has a strategy and he sticks to his strategy, he finds a rhythm. Somebody who just doesn't know exactly what they're doing and throws a bunch of energy, current, money, whatever it is, into something and is not sure about it, that's where it gets dangerous. So I'm giving you all the risks before I get to the details of actually how to trade, because what is the purpose of your trading? Are you looking to do this full time? Are you looking to do it part time? Are you looking just to get other coins? Because then you could learn the basics and not actually trade. But if you're going to get into actually trading, now you decide you want to be a day trader, which means you trade every single day. There's also traders who trade swing trades. And a swing trade means someone who pays attention to the market daily or most days and takes certain moves. Sometimes he might make 3 moves in a day, 3 moves in a week, or 3 moves in a month. And sometimes for a month and a half, he may not do nothing, which is a more advanced form of trading, right? So that is a swing trader. And most people do a combination of both, right? When you start off, you want to make sure you start day trading just to learn the habits, and you start with a small fraction of your portfolio, and you make your mistakes just day trading. And then you realize some people like being in nature, some people like talking to people, some people would rather just be on a screen and dealing with other factors, right? So depending on your personality type, doing a little bit of day trading, you're gonna be like, okay, is this something that I actually want to do with my day, with my life, right? And if it doesn't seem like that's the right case, that's fine. If you want to be in cryptocurrency and you want to be diverse, still learn the skill. It's like learning the basics of an instrument, the basics of a sport. No one says you have to go out and play it every day, do it every day. But if you're going to be in the space, it's important to know at least the basics. So when you want to diversify your portfolio, doesn't mean you have to be a trader, but you have the basic skills to do it. So on every level, when you're entering the space, it's important to grasp the basics of what's going on so you can diversify yourself properly. So
and let me just jump in here real quick, Peter. And when he's talking about the basics, the technology is one thing, but learning the words that he's using so you don't get confused is the other thing, okay? So all jokes aside, remember, Peter, when we first started talking and then someone told me about Bitcoins, remember, I didn't know what anything was. So I thought you went out and you actually purchased these coins, right? A lot of people didn't know that these are online coins. They're floating in the air. People are like, oh, how much do you have? Where do you keep them? You know what I mean? Is it like, no, not a real thing? So when he's talking about technology and the words, if you're going to get into it, just learn the basics. Like he said, if you're going to love basketball, you're going to learn the rules and regulations of basketball. You're going to learn where the 3-point line is, the foul shots, what they're worth. It's the same thing when you get into this. So do your basic research on the names and the basic keywords that he keeps using, and it'll take you a long way.
Okay, so now we'll get into some more juicier stuff, the actual trading, right? So we're assuming now you joined an exchange like Binance or whatever exchange you chose, and you got yourself some Bitcoin, and you deposited your Bitcoin into the account. Now, what an exchange is, we talked about this last time. It looks like a wallet. It's a bunch of different bank accounts for different crypto assets. So to compare to the traditional world, it would be like having a bunch of stocks or a bunch of different world currencies, right? So same thing. So we have a bunch of these different digital assets. We keep talking about the main ones here, like Ethereum, Polkadot, Binance Coin, but there's tons of them. There's like there's 1,000 Dash, Ethereum Classic, Cardano. It can go on and on. If you go to CoinMarketCap or World Coin Index, you'll see a list of thousands of coins, and literally there's hundreds of solid, good projects, right? So you deposited your Bitcoin, and now you want to decide, okay, I want to buy some other tokens. So in your exchange there, you're going to see a bunch of other names, which are other digital assets, and they're all going to have their own wallets or digital asset addresses to understand the concept easier, right? And when you trade your Bitcoin to any other digital asset, let's say you're doing this just to, like, you want some Ethereum, for example, Charles, right? So you put your Bitcoin into Binance, right, which is an exchange, and then you literally just go from one asset, which is Bitcoin, whether you move the whole thing or a part of it, you buy Ethereum, a part of another asset. Now, that would be considered a trade, and you could have just simply wanted some Ethereum. So you don't have to be a trader per se, but this is what you said exactly, knowing the basic skills. So you deposited your Bitcoin, now you move to Ethereum, and now you want to take your Ethereum off the internet, let's say. You can move it to a Trezor, KeepKey, Ledger.os, like we talked about. So these basic skills are for everybody. Like, nobody needs to say you need to become a day trader, a swing trader, or really trade at all. But to have the basic skills and to be in this new field, it's important, right? So you deposit your funds, you bought some Ethereum, you can move it off the internet. That is just for the basic people. Now, let's say your goal, though, as a trader, for all traders, obviously, if you're going to get into it, the goal is to grow your wealth, right? That's why we're trading. We want to start with $100 or $1,000 or $10,000 or $100,000 or $1 million or whatever, and grow that by 10, 20, 50, preferably double, triple, 10 times it, right? That is the goal of trading at the end of the day. So the technical skill of depositing Bitcoin and buying a different digital asset is not the difficult part. That's the part that you have to just put in the work to learn the skill. And that's why we said there's betas you can use to learn this. You don't have to go with your real money. But once the money is live, right? Now what it comes down to is three things for most traders, right? The technical side that anybody could learn. So that's very important. Learn the technicals. This is what we've been focusing on pretty much the whole part of the show. The other two parts are kind of coachable, but not really. They're coachable, like you can make it happen for yourself, but you can't necessarily, like, I could coach anyone the basics of fundamentals, understanding how to open a trade, how to read a chart. What does this signal mean? Why is this W mean something? Why is this cup and handle mean this? Why is the reverse mean the opposite? So anyone can learn these things. But the next two get a little bit more difficult, because to become a good trader, you need to have patience and emotional control. So I know those sound like basic words, but what I mean by patience is you have to understand, okay, I want an asset. I have Bitcoin and I want to grow more Bitcoin, or I want to grow more Bitcoin, Ethereum, or just more Canadian dollars, whatever your goal is, right? So you need to be like, okay, I have X amount of Bitcoin and I want to have, let's say the goal is to have more Bitcoin, but I think that Ethereum is going to outperform Bitcoin in the next days, weeks, months, hours, whatever the case may be. If you're just like super excited, you're like, okay, Ethereum's all-time high, Bitcoin's not doing so well, but I want Ethereum, it keeps doing well, I'm going to jump into Ethereum right now. And all of a sudden Ethereum corrects and it goes down. All of a sudden you're like, oh my God, I have less Bitcoin if I go back to, if now I traded my Bitcoin to Ethereum, the goal is to have more Bitcoin, but now Ethereum went down, but I like my Bitcoins, I want Bitcoins, let me move it back to Bitcoin. That is what a bad trader does, right? So you want to do the opposite of that. So this is where I'm talking about the patience, right? So patience comes into play is, okay, I have Bitcoin. This has been the price of Bitcoin the last few days, months, weeks, whatever time frame you're trading on. And now there's another asset I want. You watch that asset as one, but okay, what is that asset been compared to Bitcoin or dollars, however you're trading the last days, weeks, months, whatever the case may be. Okay, in the last, let's say we're keeping it on a shorter time frame. In the last several days or weeks, the range of a certain asset has been between, let's say, 4 and 7, right? And today it's at 6. So you're going to be buying it at the top tier of where this asset's been. You could set orders to be like, okay, if it goes back to 4, I'm buying 10 digital amounts. If it goes down to 5, I'm buying 5. If it goes down to 6, I'm buying 4. And if it's at 7, because I really want it, even though it ranges from 4 to 7, whatever the number I said, I'll buy 1, right? So what a good trader is called laterally buying. And this is where the patience come in of, you know the basics. Now you know how to read a chart. So you see all these different levels. So once you get into trading, you understand. I'm not going to use too much technicalities, just getting the concepts for people so they understand. We're getting to the basics of it. So you understand that there's these levels, right? And you set orders being like, okay, I'm buying a little bit now, or maybe not, right? Maybe you go, you know what? I'm patient, right? We're talking about patience. I'm going to set these orders because I want this asset, but I know that these prices fluctuate a lot, especially in the field we're talking about, because the newer field, smaller market caps, and it's a lot more volatile than traditional markets. So if you know what, I understand it's most likely to come down. So you set orders and you be patient. And sometimes it takes a day, an hour, a minute. Sometimes it takes a week or a month. I have orders that I set sometimes that I forget about. And I literally just opened an exchange yesterday with a partner of mine. I'm like, oh, shoot, I set this 3 months ago. Your favorite, actually. I had a bunch of Polkadot. I only bought like, whatever, X amount. I bought like X amount in the beginning. And then I had a bunch more SECs. I thought the price was a little like at a peak when I bought it. And I literally forgot that I set these orders. Then I opened my account the other day. I was like, oh, since when do I have this much Polkadot? I'm like, awesome. And then my partner, because it's always good to have people like we talk about. He's like, yo, you have this at the wrong platform. I had it on an exchange called Bittrex. He's like, if you move this Polkadot to Binance, just a different exchange, they'll give you 10% on your Polkadot. So even if you don't trade it and just hold it there, let's say at 100, a year later out of 110, pretty good deal, right? So it's like, that's why it's good to be in the community. So patience is very important with trading. So you read the charts, you did the analytical work, which is, there's tons of info on there. You could take a course, you could do it yourself, combinations, all the above. Now the patience. Now here's the hardest part outside of that. So you could coach someone patience because it's chart reading and you're setting it. Now when your order activates, so we'll stick to the Bitcoin Ethereum concept. So Ethereum, you had Bitcoin, you want to grow more Bitcoin, but Ethereum is booming in price. It dipped down for a little bit, right? So you set your orders and you were patient and activated. So pretty much on the dip, shortly after, you're almost in the green right away. Because if you're doing it properly as a trader, sometimes it works against you and you didn't set your order low enough, so it activates and then it goes even lower, so you're down. And now you have to be patient. Okay, it's okay. At least I didn't buy it at the retail price. I waited, I got it at a better price than it was on the open market, but it went down much lower, right? So this is again where the patience come in. Where I talk about emotional control, it's mostly for the gains. It also obviously applies for the losses as well. But once your order activates, because you read the market, you set your order, your Ethereum order activated, and now it goes up in price. But it goes up more than you expected. And you're like, oh my God, I expected this to take a week or a month or 10 days to get to this number. It got here in 4 hours. Oh my God, is it going to keep going up? Should I take profits? Should I not? That's the emotional control, which is very, very difficult to coach, right?
It is.
Hold on. I'm gonna see if I can pull this up right here. All right. So there is, one of the screens. I'm not going to tell you which one it is. You guys research your own. But that's what he's talking about, because these things are moving all the time. Okay. You get excited. You see the numbers grow. You see the green in 1 minute. You're trading. You're getting excited. But like he said, at 1 minute, it's here. And as he's speaking, I see these. Look, there it goes. It's moving. It's always constantly, it's moving. The numbers are changing. You got to have patience when you do this. Okay. I remember I did my first one and I thought jump. I'm like, take it out. I made $100. Take it out. I made $100. Take it out. And the funny thing is, if I just waited, I think it was 2 days more, I would have had like $300 instead of the $100. Okay. You never know. I'm not saying it does that for everybody, but you got to have some type of patience and be, the word that I'm going to use, be grateful for what you have.
Yes.
Okay. Be grateful for what you have, because at 1 minute you're like, oh, I only have 50 and my other guy's making more. Well, hey, be patient. Remember, you didn't have 50 in the beginning. Okay.
Mhm.
That 50, if you get patient, might turn into 5,000, 500. You never know. So be patient. If you're a person that likes to trade and all excited, maybe you should, like Peter said, grab a partner. The partner will calm you down. If me and Maria are partners and I'm like, Maria, let's take it out. Maria might be like, Charles, remember what Peter
Come
said.
down.
Let's look at it first. Let's look what Peter said. Remember, it could trade here. If we trade to get this, is it worth it? Because we're losing on here later. Okay, Maria, let's wait. Let's see what you know what I mean? So sometimes you might need a partner to calm you down. All right.
Well,
There
if
you
you
go.
don't have a partner, you just learn it and just come down yourself.
Gotta have some patience. I love that keyword, Peter. Patience. All right. This is not a willy-nilly kind of thing where you just have some fun and just do it quick. All right. So
I have a question.
of course you do.
Of course, you know that. And I don't want you to give it as a financial advising. I'm gonna focus it more like what would you do in terms of percentages. Let's say we put everything on Bitcoin, right? Like, and then from that we're gonna go to put a little bit on Ethereum, a little bit of Polkadot. Like, how would you, in percentage wise, put your money in every one of these, like 10%, 20%, to diversify?
So the way this is actually a good transition, because I was going to talk about this next. So I've been talking about pretty much just spot trading, meaning trading an asset at the market price against another asset at the market price, right? So this is this more safer form and the most common form of trading, right? Now, the answer to your question, Maria, is how risk adverse are you as a person, right? So to most people, just to throw out a number, I would say you should be holding a big chunk, 30%, 50%, 70% in a HODL portfolio, like meaning you're not touching it. Like if we're talking about crypto assets like gold, those are gold bars there in your safe. Those are crypto assets that are off the internet or on a wallet exchange that you trust that you're not touching, right? So even if you're the riskiest person in the world, it should still be 10, 20, 30%, a big chunk that's you're not trading with no matter what. Even if you're the best trader on the planet, I would still say you should have a third, 50% of your portfolio where you're not trading with, right?
Is that your emergency fund, Peter? If anything should go wrong, is that your emergency fund?
Well, it's not just an emergency fund. Like what we're talking about, whether it be like we're talking about cryptocurrency mostly here, but let's say even mainstream, like if you believe in Tesla, right? Mm-hmm. And you want to make the goals to make more Tesla stocks, you can make mistakes trading. You can be not patient, not emotionally controlled, read the charts wrong, combination of any of those three, and all of a sudden all your Tesla's gone. But you got into it because you wanted to believe in this concept called Tesla. So you don't want to risk your energy, your current, your wealth, whatever terminology you want to put too much on there. Exactly. So I would, let's say, for the sake of numbers, let's say like an average person who's like moderately risk adverse, let's say they put 50% of their HODL portfolio in just Bitcoin. Then they buy another 25 to 30, 40% even in other coins. So they buy Ethereum, they do their own research, they take some riskier ones, they take some projects on Polkadot, they get into some NFT projects like Flow or whatever the case may be, right? But then they leave 10, 20, 25, 33%, whatever their portfolio for trading, right? And remember, we're talking about spot trading now. This is a skill that is been around a long time.
I don't have
lots of research, do it. Get involved. Everyone on some kind of level. Now I'm going to get into, because we're wrapping up shortly here, into the most riskiest form of trading. But if you're a good trader, so now we're assuming that you've already traded stocks or cryptocurrency for this, or maybe you've traded stocks for 10 years and you just need a few weeks or a few months to get into crypto, to get familiarized with the new niches, but then you're ready to leverage trade. This is something even a professional should only take 5, 10, or a few, like 1% even of their portfolio, because it's called getting wrecked. This can go to zero very fast. For example, if you take a part of your Bitcoin and buy Ethereum, the chances that Bitcoin or Ethereum will go to zero are very unlikely. You could lose a big chunk of your portfolio, but the chances of zero, slim to none, right? If you're doing the right research, and that's why spot trading is awesome, because you could put in the time to do the research and get into projects that make sense because you did the content, you did the research, and other people are doing the same thing. So likelihood of it going down to zero are slim to none. Going down a lot, possible. Will it come back if you did the right research? You believe it's a technology that's here to stay. But when we get into leverage trading now, it's taking an asset and leveraging it 5, 10, 50, 100 times. So if, let's say, cryptocurrency is already super volatile and Bitcoin moved 10% in one day, which would be an extreme day, and you had that 10 times leverage, that's 100% move on leverage trading. The thing with leverage trading is you could put in, let's say, $1,000 into an account, and they'll let you leverage trade up to 100 times on that. So you could open a $100,000 order. But if it moves 0.1% the right way, you made a killing. It moves a couple percent the wrong way, you're down to zero because you're so overly leveraged. Mm-hmm. But leverage trading didn't even exist in cryptocurrency until about 2.5 years ago. And I would argue about a year and a half it's been. When it just comes out, there wasn't the volume, there wasn't the people doing it, there were still like glitches in it. So I would say the last year and a half, I've seen a lot of professionals emerge that are making life-changing income in leverage trading. So the concept of leverage trading would be, it's more similar to gambling. So if you have a gambling mentality, by all means, stay away from leverage trading because it will become gambling to you. But now if you're an investor that learned the markets, learned how to read the charts, had patience and had emotional control in spot traditional trading, and you want to experiment in leverage trading, please, Bybit and Femex is what I use. Great exchanges. But this is only for the professionals, because even someone like me,
it looks like we went into a pause or something.
Sorry, that was a WhatsApp phone call. I have my phone on airplane mode, but the social media people still get to you.
No worries. While you fix that, what we're going to do is we're going to take a quick break so everybody can re-energize yourselves. And while we're taking a break, put in CMJ, hashtag CMJ Live. We're going to pick our winner, and then we'll be right back. Don't go nowhere. There's a lot more information to come.
Immigrant Women in Business, IWB, is a non-profit organization bringing together women from over 50 different countries around the globe. These women have now made Canada their home and share a common goal of providing value to their new sisters. Our motto of "We are stronger together" resonates with all members, and with a diverse membership of business leaders, entrepreneurs and community builders, our goal is to make Canada better and provide guidance and leadership to those that follow.
CMJ Entertainment is a one-stop shop. CMJ Entertainment helps people do any type of events, and it's a marketing tool as well. So we'll cover everything from start to finish. If it's a wedding, we'll make sure your wedding is over the top. And if it's an event, we make sure that everybody gets information at the end of the day. Give us a call at 416-414-8964 or online, go to cmjent.com.
Yes, and we are back live. Now listen, people, call him after the show. He'll give you all the information you want. And if you don't want to call him, you want to get him right away, just send him an email. It's right there. I know he's spitting out hot fire information and everybody's excited like, oh, forget this. Let me just call him right away. Get off the phone. We're doing a live show. All right, Peter.
It was a WhatsApp phone call. I play this on airplane mode, but I can't. I don't know how to mute every app yet. So anyways, to end it up short, I know we're running low on time. Leverage trading is much riskier, but if you become my advice would be become a good day trader, whether that be in Forex, cryptocurrency, wherever you want to start. We're obviously talking about crypto, so we're assuming that you become a good cryptocurrency trader. And this takes much more time, where you just do the research, get into small projects, get into bigger projects where they're going up or down. Mary, go ahead.
Okay, so in my case, right, I have everything like long-term investment, right? Like I don't move anything. I don't do day trading or anything like that. And as you said, you have to be an expert to do day trading. You have to get trained. And like, is there somebody that let's say, okay, I'm going to give you my money and then you invested it. Is that something that you're planning in doing, or you have someone that you recommend that we can do?
So that already exists, right? That's what we talk about, the time, right? For the people that don't want to put in the time themselves, you put in a little bit of time and realize there's index funds, just like traditional markets. Like we talked about, MBI is an index fund. So it's not necessarily you trading, but it's like somebody else is trading within a portfolio and you're holding the asset, the digital asset that's being traded through variable other assets in itself, but you're just holding the one. There's that option. Now, what came out, just like actually, my team and I came up with a concept years ago, but like it worked so fast. The gentleman we worked with was like a man from traditional finance, traditional business. He was like affiliated with the Dragon's Den, one of those shows that like work with entrepreneurs. So he thinks everything had to be like when he came to us, he was new to crypto. So we said, okay, let's do it. The idea is great. Well, exactly what you said. Why, if you're, let's say I'm a good trader, why can you just put in money and follow all my trades? So we wanted to build a platform like this, right? But the gentleman was like, I think 2017 fall, we're like, yo, do the ICO right now. It doesn't matter if everything is not where it should be. Like, this is not traditional business. This is the time to take action. The man built a traditional business plan. It took extremely long. And our investment there didn't play out as well. He's building it on his pace. But the idea was obviously not just us. Lots of people had it. So again, just like a couple of years ago, like don't quote me on the date, but more recently, just like the leverage trading came out to crypto just recently, there is platforms now where you can just join an exchange, put in your Bitcoin and go, you know what, I want to trade, I want to copy Trader X or Trader Bob or Trader Tom, whatever it is, right? And you will actually do all the same trades he will and gain the rewards. So that already exists. So that's why I always say put in the time. So whether it be the time to you become a good trader, putting it into index funds, things like this. And now if you don't have bigger wealth, right, and you've never traded, most likely you're going to get wrecked, meaning like your account could go to zero leverage trading. But if you just put in the time and research projects that are just coming up that don't exist yet, sometimes you have to be up in the middle of the night applying to buy a token, and you could just be buying $10 worth, $100 worth, $1,000 worth. But you're competing with people who are buying millions. It's not about the number, it's about the taking the action. And all of a sudden, even if you start with a tiny number and you took the research, you did the time, you found out about something before everybody else, and then you took action and you actually put in your currency or your effort into it, whatever the number is, there's tons of examples where literally there's tokens that somebody called me a month ago that was 20 cents, that's $6 now. You do the math, I think that's 26 times or something even more crazier on your money. It's like 2,000, like there's crazy returns. So it's like you put like a few $100 into that. That can be life-changing income for some people. So time is an important factor, and assuming you don't know how to trade. Now, if you do know how to trade, you have less time and you're already a professional, that's where leverage trading comes in, right? That's where you can take moves that you're doing in the traditional markets, but make them much more aggressive. But the biggest risk with that is because you're leveraging yourself, there's a chance where if it goes the wrong direction and you don't have certain precautions put in place, it could, it's literally, I'm a very confident human being, very good trader. I did it professionally for several years. I just got into leverage trading 2 months ago. I got wrecked 3 times. 3 times my account went from a big number to 0. The first time it happened, it took me 8 days. I remember trading for 8 days. Almost every day I could have closed it for a tiny loss. But my ego was like, no, I like trading and I like closing in green. So my closes in green. So instead of taking a tiny loss, 8 days I had the choice. I ended up taking a massive loss and losing that whole account. And most human beings would be like, oh my God, that's a salary for a year for some people, or whatever the case may be. I'm never doing this again. Mia, let's do it again. Reload, lock and reload. You know what I mean? But I'm a risk taker. So to somebody else, that would emotionally break them for a month, a week, a year. Like they may never trade again. So that's why I mean, leverage trading is for highly risk takers that are not gamblers. I'm blessed because I have lots of friends who are like obsessed with whether it be casinos, sports gambling, all the above. I go to a casino, I literally have drinks. If we're there a long time, I'll put $100. I'll seem like a loser. And like, to me, that's like me spending it on like I'm not, my goal is not to turn my $100 in a casino to 200. Like I'm expecting it to be 50, and if it's 125, that's a bonus. You know what I mean? So people like me that put in the research, the time, get good at trading, and then want to get into leverage trading, definitely it's for a certain kind of person because it's very risky, and it's talk about emotional control. Yeah, patience chart reading, you want to get into leverage trading, that is the most emotional control. And actually, we'll end with this. I'm very blessed to be doing this right now because there's not as much excitement, especially when we're in Toronto, Canada, so people know. And we've been in a major lockdown for several months, pretty much the last year. And There's not many things to keep you excited. So for me, I'm very blessed. The last 2 months, like I didn't sleep last night. I slept on my couch. I live a good
It's
life.
not my money.
My screen's off all day, but I'm sure like there's my couch, there's my main TV that I do my research on, but there's my trading screen. And literally I'll sleep on the couch because I'm like, okay, I'm down in a trade, but I'm gonna make it back. And all night, every hour, I'm like, oh shoot, the market moved. I can make some movement. So if you're crazy like me, leverage trading is probably for you. If not, do research, patience, doing the time, and just get into traditional spot trading. And that can make life-changing income, or at least if that's not the goal, put your hard-earned energy, money, whatever it is, into digital assets that are rare. And this is going to change your life one way or another, because this is where the future is going.
All right. So here, before we go on, quick question. Somebody is on my Twitch account and he wants to know, hey, is trading cryptocurrency a placement? He wanted to trade more than a certain amount and it wouldn't let him. Does all platforms do that? Do they cap you at how much you can trade?
So he might be trading a small cap coin or a small cap exchange. So like you can go, for example, on CoinMarketCap, World Coin Index. There's a few other ones like that, websites. The YouTube videos I posted, the links are down there as well. But it's, again, CoinMarketCap or World Coin Index. You can click on any coin, and then there's a button called Markets or Exchanges, and you can see the volume. So sometimes you might want a digital asset, and there might be on just 2 platforms, sometimes 20, whatever the case may be. But you might just be on the wrong one that doesn't have volume. Like there might be one that has 10,000, 100,000, or 10 million trading volume, another one that's $20. So it doesn't mean there's something wrong with the asset. It just means that for whatever reason, nobody's aware that the asset is on this one platform. So you might just be on the wrong platform. And if it is a very small asset and you're trying to buy a lot of it, just do more research. There's always a way, right? So it's like if you're trying to buy an asset that just came out, you might have to go to like Telegrams. You might have to go like find outside the box. So most of the time, it's a simple solution of you're on the wrong exchange with the wrong liquidity for that asset. So it's as simple as just finding what you want to buy and most likely just going to a different platform that has much more volume. That's all it is.
All right. All right. You know what time it is, people. Put in hashtag CMJ Live, and then you get to talk to Peter, the man himself. You don't have to call him during our show, people. Come on. You know, you can talk to him right now. You can win to talk to him. We're going to pull a winner in a few seconds. I see there's only a couple of people in there. Your chances are great. Just put in hashtag CMJ Live, and you have a chance of talking to Peter. So while we do that, I'm going to boost this one more time because we haven't said thank you to our sponsor. We want to thank our sponsor. Give them a big round of applause.
Where's the confetti?
just because you want confetti. There you go. All right, here we go, Peter. Our winner for today, the drum roll. Put your hashtags in. I see them coming in now. I see them coming in. Quick. In 3, 2, put your hash. Oh, I'll wait 2 more seconds. More hashtags are coming in. More hashtags are coming in. More hashtags are coming in. All right, here we go. Ah, there we go. Congratulations.
Yes.
I see a little baby on there.
I know, right? Like,
All right.
That's
All right.
a crypto billionaire baby right there.
there you go.
All right, everybody. Thank you for entering. Don't forget, we do this again on Friday. All right. So tell a friend if you need more information, you can get a hold of Peter, send him an email, go to his website or send him an email and say, hey, I saw you on the show. Just want to know if we can get some more information. How can you help me help me get better at this thing that we called Bitcoin, cryptocurrency, my favorite Polkadot. No, okay. Oh, I don't know why I like saying Polkadot when we're on live with you guys. All right. But thank you so much, everybody. Thanks for coming on. Here we go.
Thank you, everyone. Thank you,
There you
Peter, for all
go.
the information. Thank you.
All right. So remember, check us out. We'll see you on Friday, everybody. Be safe and safe trading. See you next time.
Has come to an end. But the fun doesn't have to stop here. If you have any questions, suggestions, or feedback, head over right now to Twitter and Facebook and like, share, and get involved. Join us next time.
Please be advised that this podcast is meant for educational and informational purposes only and is in no way a replacement for legal or medical advice. The opinions contained within are solely those of the interviewers and interviewees and should be received as so. Those seeking help or advice